We both had a fair amount of experience in real estate, and Charlie made his early money in real estate. Under most conditions, it's hard to find real estate that's really mispriced.
By its nature, real estate tends to be a very lousy investment.
Real estate is not a commodity.
You know how everyone's buzzing about buying a house like it's the golden ticket to financial bliss? Well, our pal Warren Buffett, the investment guru, isn't exactly on the same page. He's got some wise words that might just pop that housing hype bubble. So picture this. People are racing to snag their dream home, thinking it's the ultimate investment move. But here's the kicker. Reality hits hard. Skyrocketing home prices versus slow-growing incomes? It's like trying to catch a shooting star. Tough luck. Now, enter Buffett, the grandmaster of investments. He's waving his experienced wand saying, "Hold on a sec." While homes do offer cozy shelter and warm fuzzies, Buffett's not shy about pointing out the not-so-fun stuff. Owning a house means coughing up cash for maintenance, property tax, and more. Suddenly, that dreamy investment doesn't seem as dreamy. And here's the plot twist. Buffett doesn't see houses as the stock market's cool cousin. Unlike stocks that can dance with liquidity and scale like rock stars, a house's value grooves at a slower pace and depends a lot on location. Flexibility and adaptability? Well, they might take a hit when you're tied down to bricks and mortar. In a nutshell, Buffett's breaking the news. Buying a house isn't a guaranteed ticket to a money party. Sure, owning a place brings warm fuzzies, but treating it like a money-making machine needs a reality check. So before you dive into the housing craze, take a peek at the costs, the maybes, and the wide world of investment adventures. It's a wild ride out there. Warren Buffett isn't big on real estate, and it's not because he's got something against houses. No, sir. This wise investor guy prefers playing the stock market game, and he's been acing it for ages. Back in '58, he did buy a house in Nebraska, but that's the only real estate adventure he's into. Warren Buffett's home, often called the Buffett home, is in Omaha. He bought it in 1958 for $31,500, around $285,000 in today's money. Even though Buffett is super wealthy, his house is in a regular neighborhood called Dundee. The house isn't massive like those of other billionaires, it's just a comfy, old-style family home. We don't know the exact size, but it's not one of those huge mansions. Over the years, because real estate tends to go up in value, Buffett's home is probably worth a lot more than what he paid for it. But Buffett doesn't brag about it. He likes to keep things simple and often says he has no plans to sell his home. Despite being one of the richest people ever, Buffett lives in a normal house because he doesn't believe in spending too much on fancy things. His home is about comfort and feeling at ease, not about showing off wealth. When he bought his first property in the late 1950s, Buffett already had a knack for smart investing. He used the money he made from his successful investments to get his house. It was the start of him living there for a really long time, showing how he sticks to being smart with money and keeps things down to earth even with all his success. So why no real estate love? Well, managing houses is like having a full-time job, unlike the stock market, where you can trade stocks without babysitting them every day. Buffett's all about focus, and being a property manager doesn't jive with his disciplined style. He'd rather stick to stocks where he can explore new money-making opportunities without property hassles. Buffett's all about keeping things in sync. His stock market success comes from being patient and picking businesses with potential for growth. Real estate? It's like a different language for him. It doesn't quite fit into his favorite investment style. He's into investments that match his strategy and give him enough time and brainpower to spot golden opportunities in the stock market. So when Buffett skips real estate, it's not a random decision. He's all about playing to his strengths, sticking to his investment game plan, and having the freedom to dance through the ever-changing stock market beats. That's his secret sauce for coming out on top in the investment world. Okay, imagine this. Warren Buffett is like a superhero who doesn't want to deal with the headaches of taking care of houses. Why? Because houses need a ton of attention, especially when it comes to finding folks to live in them, especially during tough times. Now here's the deal, managing houses is like having a 24/7 job. Unlike stocks, where you can trade without being glued to the screen, houses need constant TLC. Mr. Buffett, being the cool and focused guy he is, doesn't want to be tied down with all that property drama. He likes to stick with what he knows best, making smart investments without the extra hassle. But hold up, he's not completely saying no to the real estate world. Instead of diving headfirst into owning houses, Buffett found a sneaky way to get in on the action. He invested in something called Real Estate Investment Trust, or REITs, and it's like he's joining forces with others to invest in real estate without the fuss of managing it. One of his favorites is Store Capital Corp, a big player in this REIT game. By rolling with REITs, Buffett dodges the tricky parts of owning houses while still enjoying the benefits. It's like playing smart and having the freedom to focus on what he's awesome at, rocking the stock market. So next time you hear Buffett isn't all about houses, remember, it's his way of keeping it simple, smart, and stress-free. So Warren Buffett, the money guru, likes to compare making dough in the real estate and stock markets. Picture this: the stock market is like a giant shopping mall, super big and easy to buy and sell stuff. But real estate is more like a cozy neighborhood. It's chill, but not as flexible. Now, when it comes to making money, Buffett thinks stocks are the real MVP. See, the stock market is huge and you can quickly jump in and out to grab opportunities. Real estate, on the other hand, is a bit like having a roof over your head. It's cool, but it doesn't have that crazy growth potential like a booming business in the stock market. Buffett's success story with stocks like Apple and See's Candy Company prove this point. These investments made him tons of cash, way more than you'd get from just having a piece of real estate. It's like comparing a little lemonade stand to a tech giant or a candy empire. So in simple terms, Buffett loves the stock market because it's like a bustling city of opportunities where you can make serious bank. Real estate? It's more like a cozy cottage, a nice place, but not the fastest route to becoming a money-making wizard. So, Warren Buffett likes playing the money game more in the stock market than in real estate. Why? Because the stock market is like this massive playground with tons of chances to make money. On the other hand, the real estate market is like a cozy corner. It's nice, but not as big. Buffett isn't alone in this thinking. Check out the richest folks worldwide. None of them got super rich just from real estate. It's like real estate is a small piece of the money pie compared to the stock market, which is like a mega buffet of wealth opportunities. Buffett's money journey is all about stocks. He's like a stock market wizard, and his net worth proves it. Over $100 billion. By sticking to stocks, Buffett can use his time and skills to find good deals, make smart moves, and build his wealth. It's like he's found the sweet spot in the world of stocks, where he can make his most of his money mojo. So in simple terms, Buffett chooses the stock market because it's like a giant playground full of cash opportunities, and he's the master of the game.